Why is BNP Paribas here? Which is to say, what do you see as your competitive advantage in the North American marketplace?
Well, primarily, of course, we're a global institution based in Europe. We have an enormous number of clients around the world. This is a huge pool of money, and we think we can facilitate a lot of business on behalf of our clients around the world. That's the thing. We have, second point would be, we do have a strong energy business. We execute that in the U.S. as we do globally. We have a strong debt capital markets in Europe, where we're #1 euro issuers. We're evolving that here, #10, maintaining status. Huge derivatives house, equity or fixed income, and the structured products are an important feature for all of our clients. And then we're a traditional lender. We've got cash management capabilities here, which we provide for our clients globally. So, you know, our client base is large corporate America, too.
It is as well, because it brings me to a follow-up question. If I look at who the big banks are in this market, we know all the names. It's JP Morgan, Bank of America, Citigroup, Wells Fargo. Are you not competing for their clients as much as they're competing with each other?
We definitely are doing business with their clients, and they would view us as a competitor in certain instances. So, but the main point for us is if you're involved with, pick a large corporate name, if you want to do business in Asia, if you want to do business in India, if you want to do business in Europe, if you want to do business in parts of Eastern Europe, if you want to do business in the Mideast, we are there in a meaningful way, and we can provide that kind of support for our clients. So a good corporate client for us is somebody who has a global footprint, and there we can make a differentiation. Otherwise, we have to bring sector expertise or product expertise. But
so of those competitors that we know and see here all the time, who do you see as your strongest rivals?
Well, the U.S. banks, I mean, JP Morgan has done extremely well through this current crisis, and I think they've done very, very well. We see some emerging U.S. regional banks, but frankly, it would be the U.S. global banks. We would compete head-to-head with the Goldman or Morgan Stanley, but it's a small group of banks that really.
Everett, you've been with BNP Paribas since 1989, most of it here in the United States. What was it like to watch the European crisis unfold from here, given the impact it had on, say, at the very least, BNP Paribas shares?
Yeah. Well, I would say pretty challenging. Not much at various points in time we could do about it, but stay focused, continue to do our business. And certainly the repercussions now are, as we start to modify and adapt, you know, we're going to shrink some of our U.S. dollar exposure. That's going to have an impact on us. But yeah, during the height of the crisis, the impact on us, because we're a Eurozone bank, it was particularly acute, I would say, in the fourth quarter of 2011.
As you mentioned, you're exiting some businesses here by choice.
Yep.
Did you lose some business not by choice, involuntarily, because of concerns that some of your clients may have had, validly or invalidly, about the health of your balance sheet and the prospects for your company?
I would say very, very limited. And the real issue for us was what's been well publicized is just the movement by money funds away from Eurozone banks in particular. So the impact for us was, did we lose some hedge fund balances in our prime brokerage business? Yes. And did we lose some deposits from the meaningful deposits from the money funds? The answer is yes. But businesses, not really, no.
Since February, or in February, the amount of money fund exposure to BNP here in the United States has more than doubled. So what does that say about your efforts and ability to recover some of the business that you lost?
Oh, we have any questions that did exist, I think, have been pushed aside by the current liquidity situation. So it's a materially different game from December, and improved January, February, and continues to roll. So today we have Our CP program is growing rather meaningfully. Our ABCP backup, our conduits are well funded. So I'd say it's a material change in the market attitude and feeling towards the bank.
How much of that would you say is attributable to steps undertaken by BNP, and how much of it is a function of the liquidity we've seen from the ECB in the form of the repo operation, the 3-year loans, and the existing dollar swap lines that the central bank here in the United States, the Fed, has set up for the ECB and others?
Well, clearly, the latter point is very important, and I think that provided a lot of support until the ECB really opened up, and liquidity being provided was enormous benefit to the whole, I would say, European banking community, to the market at large. The initiatives that the bank took, remember, we're still AA minus, okay? We were at AA. So we enjoy some privilege in terms of our credit rating and relatively well positioned there. And the bank was very aggressive in saying we're going to reduce our capital consumption. We're going to be compliant with Basel III by 1/1/13. I think there's only 3 banks that have actually come out and stated that as a goal. So that, I think that put it, when liquidity came back into the system, we were extraordinarily well positioned based on the steps that we'd taken. So would I say those steps were actually, we did need some facilitation, and certainly the ECB facility was helpful.
Being forced to reduce your capital consumption for a banker is kind of like having to give away your children. So of the children that you've got, which ones are you most committed to keeping, and which ones do you reluctantly feel like you have no choice but to give away?
Well, it's a good point. First, I don't know about the analogy to children, but let's just say that it's very hard when we've been in a growth mode to all of a sudden reduce general exposures. But today, we're committed in our core lending business to our corporate client base. We have identified strategic clients in our FIG and energy business, or financial institutions and energy business. We have structured product that's available in our leverage finance, merchant banking business, aircraft finance, project finance, where we've decided to be less aggressive in shipping, intermodal transportation, and of course we have announced the sale of our reserve-based lending business in Houston earlier in February, and so that's in the process of being transferred over. So, is
it fair at this point to say that's the extent of the impact of deleveraging here in the U.S.?
Yeah, I think that's fair, absolutely fair.
So where do you see yourself 5 years from now? How ambitious can BNP afford to be?
Well, I think we've got a period of time to digest the regulation, and we have a sort of, and that'll be a while, but assuming that works out, I see us in resuming sort of a growth pattern somewhere in the second half of 12 or 13, and that's going to be in support of an identified strategic client base, our prime brokerage activity, our institutional investors, including asset managers, insurance companies, and hedge funds, and any corporate where we can take advantage of our global footprint.
We hear American bankers complaining about Dodd-Frank and the Volcker rule. How is it going to affect a European bank like BNP?
Well, in many ways, similarly, because we have Volcker is still, that's an issue.
Still applies?
It still applies, and I hope the reports in the press that it's going to be pushed out a little bit will be helpful, because there's a lot of work to do on that. Certainly, swap dealer registration is an issue for us. It's an issue for the U.S. banks, and that's a choice we'll have to make over coming time. Data repository, clearing facilities, these are issues that we face and U.S. banks face, so it's very similar.
So much of what you do is capital intensive. Why not focus more on the less capital intensive businesses like M&A?
Well, we have a commitment in the M&A space, which has been growing. We bought 2 years ago a boutique called Hill Street Capital that brought us some senior bankers and a focus in the mining space, some Latin American business, also reinforced our energy business. So we have made an investment there, modest. We still continue to take advantage of cross-border activity, so we continue to do it, but it's very focused, highly sector-driven or strategic client-driven, U.S., Europe, Europe, U.S.
Do you believe the line that a boutique banker would feed a guy like me, that the universal banking model faces serious challenges and may not survive?
First of all, I think the universal banking model is not for everyone, and there are very few banks that would even qualify today. We are going to, I don't even know that we would call ourselves a universal bank as much as we're a European bank with a global footprint with, very specific operations in the U.S. and Asia and the Mideast. But I think people have to be pretty careful and make very, very tough choices over the next couple of years. And I think being everything to all people is not a viable strategy. I don't think that's affordable today.
Who can afford it?
Well, there may be a couple of the big U.S. banks. I'm not so sure I see the Europeans who can fully afford a full-fledged, universal, global bank. I think people are backing away from that. It's going to be a tailored, focused model, no matter what happens, even for a bank our size. And certainly we're one of the 5 largest banks in the world these days. We've got a couple 100,000 people. We're in 85 countries. So we can afford to do that, but we're going to have to do it in a very focused way.
So even for the very biggest banks, tough choices still have to be made.
Absolutely, no question.
You own a bank west of the Mississippi, based in California, Bank of the West. To many people on the outside, it doesn't seem a logical fit with the BNP Paribas. Why keep it?
Well,
why not say sell it to the Japanese? I can think of one Japanese bank that would love to add another lender in California.
I am sure there are several banks in the United States, large regionals or Japanese, that would like the footprint and be interested in Bank of the West, but it's not for sale. It's an integral part of our global retail business. It has a very strong operation in Hawaii, First Hawaiian, and it's, this market, it's, I think, performed better than its peers, and it's performing well these days. And personally, it's just part of a global retail business. So it's part of our portfolio approach to businesses. So remember, we're a little over half of our business model is meant to come from retail, of which Bank West and First Hawaiian are part. So
clients of yours look at the Fed stress tests and may feel encouraged by the fact that so many banks passed. Could BNP Paribas pass the Fed stress test?
Oh, I don't have any. We're not doing exactly that test, but the European stress tests, which were done by the
EBA.
Yeah, as you probably seen, there was not an issue for BNP.
So what would you say to a client who looks at a BNP Paribas and says, I'm not sure I have as much confidence in that balance sheet as I say might have in a big American bank because they haven't gone through that same process that we saw the Fed put those banks through?
Well, I'd ask them to focus on our target for Basel III equity. So we're going to be at 9%, 1113 compliant, and that's got a lot of risk-adjusted features in it. I would say look at our earnings, which are rather meaningful, even after taking some charges for the disposition of Greek debt and sovereign exposures. And I think the earnings power off of this platform is a compelling feature, and let's not forget the credit rating.